Welcome back. I hope you're having a fantastic day. It is February 19th of 2022, and we are going to take a look at what is going on in the news. And with the Bitcoin and cryptocurrency market today, traditional markets are closed. Monday is a holiday, so we have a little bit of time before traditional markets open back up. But again, the news of the day, no matter where you get your news, is all about Russia and Ukraine. And it doesn't matter what news outlet you're watching, Western news or over in Russia and Ukraine, all eyes are on the situation, especially with Russia testing weapons today, nuclear weapons. Obviously, they're not armed, but firing rockets and missiles. This is the Moscow Times talking about the Ukraine crisis, and then Ukraine news, and Zelensky talking about wanting to meet with Putin, and also talking about sanctions and more support from the West to help them out. But anyways, regardless of what the real situation outcome will be, all investors are watching the situation right now, and it has moved markets. As you can see, Bitcoin had a bit of a rough evening, coming off the back of comments all over the world about an imminent attack by Russia coming in the next couple of days. And if it did happen before markets open on Monday, you will likely see a big drop in the markets. So just something to be ready for. And of course, if nothing happens, we're going to continue to range. This is Bitcoin on the hourly. And as you can see, today being the 19th, there's been a bit of a drop the last couple of days. But let's see what we're looking at here. We have the hourly here kind of playing out. Some people are looking at this as a little bit of a wedge pattern forming here, a little bit of a triangle pattern forming here on the hourly, with a, I guess you could call it a rising triangle. Let's look at the bottom of this here. So you could call that some sort of a rising wedge. All kinds of ways you could label this, but anyways, the idea is that price will compress and then break out to the upside, maybe like what we've seen over here in this area. But right now there's no telling. Price does look like it wants to bounce right here before further continuation to the downside. As you know, we are waiting for the retrace, but kind of with all the world events going on here lately, all bets are off in terms of where price could potentially be going. It looks like, just like the other day, price was wanting to unwind this retracement. It looks like it wants to unwind that complete retracement and start testing these $35,000, $36,000 level again before continuation to the upside. But again, with what's going on the geopolitical front, if there is a situation, it will likely just kind of shoot straight down. And we don't know where that's going to stop. It just depends on how bad the situation is and what traditional markets do. So just be prepared for that. There could be a sell-off coming if there is a invasion, but depending on what your strategy is, long-term strategy, and your basis is, you could just hold through it, or you may want to exit it if we get a little bit of a bounce and kind of ride it out and go into cash and just wait till the dust settles and then jump back in. There's always going to be another trade at the end of the day. We'll take a look at the 4 hour, and you can kind of see how price has been dropping with the lower highs down the 4 hours with lower lows. And it's all about trends, and it's all about price action. And you can draw these trend lines. I know some people don't like trend lines, but they are pretty helpful at the end of the day in terms of identifying trends, lower highs, lower lows, higher highs, higher lows, uptrends, downtrends, and kind of seeing how price can kind of respect the trends, come back and back test them, pop up, and then come back and maybe back test this trend again. This is on the 4 hour. And as you see, we have this rising trend forming here that price is coming back to and kind of getting hung up on there and bouncing around a little bit to see if it continues up and then comes back and checks and moves forward, or if it's going to break through and check this trend line down here. So that's on the 4 hour. And then if we go to the daily, this is where you can really pick up your daily trends and start to take a look at the original trend line that we were following was right here. And this trend line now has been broken to the upside. So price could be coming back down to back check this trend line. Of course, you have the lower end of the trend line here coming up from the macro range of support here. You can take the wicks and just kind of create a macro trend line there that you could see price eventually and potentially coming down to back check. But now this trend line has moved. So since we've broken out, you could redraw the trend line there, and you can say now we have a new trend with your high, your lower high right in this area. You could call this is your lowest low. You could call this a higher low right now being set in, but we have to wait and see how this price action plays out, if it keeps continuing down or if it bounces up. But now we could have this trend line that we're following here to ultimately test down in this lower range. And I've got it on the wicks. You could also bring this up to the daily close if you want to, where Bitcoin had the $35,000 daily close. You could bring that trend line up a little bit more, where price would obviously resolve, test this lower trend line, and then that's where you could look for your breakout on your lows. But on your macro low, you could go with the wicks, just because price action has visited those zones previously. And this kind of gives you that little bit of a triangle there that could be playing out with price action, ultimately getting into this area to figure out what it's going to do. And again, conflict is going to kind of trump everything. So let's take a look at the weekly. We'll remove all that. And what are we looking at on the weekly? So we've been plotting some price action here on the weekly with your major averages, the 50, 100, and 200 week moving averages. And we've looked at any time that Bitcoin has lost the 50 weekly moving average, it will tend to go down and check the 100. And then ultimately, if it breaks the 100, it will tap that 200, and it will stay down there various lengths of time. So let's go back and just back check this whole thing. This goes all the way back to 2014. This was the peak of November 2013, going into 2014. Price broke below the 50, danced around on the 100, and went down and stayed on the 200 week moving average for, let's see how long that was before it broke back above trend there. So it broke below the 100, and it stayed below the 100 for 357 days. So 357 days before it broke back over the 100 week moving average. And then it was on to the next bull market. This is 2017, 2018 bull market. Price came down, bounced off the 50-day, lost the 50-day, back checked it again, and then went down and broke right through the 100 and then landed on the 200-day. It didn't stay down there for long this time. This time, after it broke the 100, it only took 175 days to get back above it again. And then this was right in this area here. Obviously, that was that November, December of 2018, 2019. And that's where the Fed raised rates, was December of 2018. When this big drop happened right here, price bounced back up and was coming up into what my philosophy is, because broke back above the 50-week moving average, came back and back checked it right along with the 100-week moving average, bounced off of it, and was on its way up until the March 2020 pandemic happened. And then all markets sold off, broke the 50, broke the 100, went down, but didn't stay down very long. Of course, the Fed jumped in and saved the day. So that was only about 50 days that price stayed below, maybe 30, 45 days it stayed below the actual 100-day moving average at that point. Yeah, probably 45 days it stayed below the 100 moving average before it broke back up into the bull market. But my thesis is the bull market was starting back in January, February of 2020, after we bounced off of the 50-week and 100-week moving average here. I think price was already on its way to a new bull market. I don't know if it could have gone as high as 64,000 without the Fed intervention and the institutional investors, professional traders getting involved with trading at this point, because there was a lot of liquidity injected into the market. As we know, we've talked about that before. But then after that $64,000 peak in May of 2021, price came down, checked the 50-week, checked it again right here at the September of 2021 timeframe, bounced off of that, hit 69,000, came back, bounced and checked the 50-week, ultimately losing it. So now we haven't quite touched the 100-week moving average yet, but price may be rolling over to come back down and check that. And if it breaks the 100, then it could go down to test the 200, which by the time that happens, let's kind of see what that may look like. Depending on what price is doing, it could potentially roll into that, $24,000, $25,000 range, somewhere around there, as these averages kind of continue on. If price is rolling over, it kind of does this number a little bit. So that is a potential that you could see there. And that's kind of the history of what's happened when you look at these moving averages and the price action there. So let's turn that one off and let's go over to the Gaussian channel. Check in on the Gaussian channel. We've been testing. Bitcoin broke the midline of the Gaussian channel, back tested, now has rejected the midline of the Gaussian channel. Of course, the week closes out tomorrow, so we'll have to see what that does. But the last time that happened, of course, that was the March pandemic. It was kind of lights out there for a little while, stayed in the Gaussian channel for a number of weeks. Once it entered the Gaussian channel the last time on November 2019, it stayed in the Gaussian channel for 252 days. So currently, price has been in the Gaussian channel for a total of 56 days. So we don't know what it's going to do. We'll just have to wait and see. Last time over here, price entered Gaussian channel. This was back in 2018, 2019. It took 364 days to get out. Price broke below, up, back checked it, and then ultimately dropped. So you can see what happened there. And then same thing back in 2013, 2014. Price broke below the midline of the Gaussian channel and stayed down in the Gaussian channel for a total of, let's see what this came out to be, 406 days. So that's an indication of what we could potentially be looking at here if price kind of continues on, especially given the fact that the Fed is out of the picture now, interest rates are rising, inflation is high, and the economy is not in the best place that it could be. We could be looking at, this is kind of what we were talking about, some more sustained downward price action for a while price kind of consolidates and gets ready for the next bull run. The question is, how low is it going to go? And right now, we do not know. We're going to have to wait and see what happens. And here is your logarithmic growth curves, and same kind of thing. Whenever price has been below the midline, it tends to stay down there for a little while. So let's look at the beginning and go back to the 2011 timeframe when price broke below the midline of the channel. It stayed down there for 546 days. The second time, now, of course, the other thing too is this is when price touched the top of the growth curve. And once it touched the top, it breaks down into the lower level. And once it breaks that midline of the logarithmic growth channel, it stays down there the second time for about hang on, how many days was that? So it broke right down in here, came out right here. That was 924 days. And then the next was 2017, 2018, price breaks below midline of the channel, stays in there for 784 days. So those are the three past experiences that Bitcoin has had. Anytime it's broken below the midline of the logarithmic growth channel, the growth curves. And, each time price at the peak touched the top. It did not do that in the previous cycle. So the question is, was this a peak? And we can look at the pi cycle top indicator. And I think we've looked at that before, but let's pull up pi cycle top indicator and see what that shows us. Let's take a look at that and see what that shows us. So the pi cycle top indicator picks pretty much all of those peaks, except the first one. Wasn't enough data in 2011 to really pick that, but we know obviously that was a peak. And let's put this on right here. So it picked the 64,000 as the top, not the 69,000 in November of 2021. So the real question is, was April 2021 the peak or November 2021 the peak when price was higher a little bit? But this whole situation here is price was potentially moving into more of a bear market, but the large institutional holders, the whales, came in and supported and jacked price back up for one last liquidity run before we were heading off into a more longer term sustained bear market. So that could be one thesis behind what happened here recently. It could very well be that price was heading in more of a longer term downtrend, but price got brought back up by the large whales, large institutional holders, to kind of grab that liquidity one last time before we kind of roll over into a longer, more sustained bear market. And there was a big altcoin run, that was DeFi summer that we saw. So a lot of the altcoins ran. And if we take a look at that, let's get rid of this and let's get off a log here and let's go look at the total three. This is just all the altcoins, not included Ethereum. You can see that the altcoins kind of ran and peaked after Bitcoin and had a nice little extension here. Same thing with the total two. And several altcoins went on to run and hit all-time highs. If you look at Ethereum, had the same kind of run. Avalanche obviously went on a big run. Solana went on a big run. And a lot of these coins are now unwinding this run and reversing. Solana especially is testing major structural support. If it loses this level right here, then it's going to be back down into that $60,000 level and potentially below that, especially if we have a big sell-off in Bitcoin and the broader financial markets, the traditional markets. So a lot of coins are in the same boat. Cardano, same thing, kind of hanging over the edge of the cliff here with no support below it. Crypto.com, same thing, big run. So a lot of the coins have gone on a run. And what we've been looking for, obviously, is for Bitcoin to retrace, because it's in that retracement where a lot of these altcoins could run. A lot of that happened right here during this time. So the question is, has the run already happened, or are we going to have another leg? And right now, there's just no way to know until we get through what we're looking at right now. There's a lot of headwinds given the situation with the Fed, new monetary policy, QT versus QE, quantitative tightening. And if they start reducing balance sheet, raising rates, all those things all at the same time, you're going to continue to see a lot more downside, just like we've seen in traditional markets, especially the NASDAQ taking the biggest hit, testing major structural support here. So if these previous lows get taken out on Tuesday when markets open, if there is a situation and these lows get taken out, then there could be more significant downside for the markets. And if you look at traditional markets where they're at right now, they've dropped. They're sitting about 10% on the S&P right now from all-time highs. And we've been talking about the deleveraging that was going to be coming, that needed to happen. 16, almost 17% on the NASDAQ from all-time highs. And the Dow is at right around 8% from all-time highs. So the Dow is hanging on better than the S&P and NASDAQ right now. And the real question is, where is this going to land? And again, until the Fed comes out, makes their move and puts their cards on the table, and we see what's going on with the global geopolitical climate, we're not really going to know where this is going to land. But I can tell you that if there's a major attack, Monday or Tuesday market open will probably sell off about 10%, plus or minus 5, maybe 5%. I don't know about it. It's not going to sell off 10% one day necessarily, but we might see 2 to 5% down in the major markets, where you could see potentially 10% or more for Bitcoin in the altcoin space in one day, if there's a major situation that investors are worried about. And these are the things that I am tracking and looking at. So I hope you find this video helpful. I hope you have a fantastic day. I will see you on the next video.